Bitcoin crashes below 78,000 while gold and silver rebound today. Thank goodness. Sad to see AMD shares fall over 8% in the after hour after posting a beat on the top and the bottom line of their earnings. This is another episode of All in Society, a late night edition of All in Society. Please read over disclaimer and always do your own research. If you like anything that you hear or see in this video, please do your own research and talk to a professional before you put any capital to work. All right, y'all, let's get to it. Welcome to another episode of All in Society. Let's talk about it because February has been rough. I did post on the socials. February tends to be a down month historically. It's not a strong month, but that doesn't mean that we can't turn around and bounce back after having a pretty decent start to the year in January. So let's not wait any further. Let's get to the recap. As always, I go to Google Gemini to do a little bit of research. And it gives us the top 5 stories of the day. So number 1, the tech tumble. So growth names were hammered as the VIX surged back above 20. With that surge, I don't think that we're going to stay here too long. So I actually put a put against the VIX that it'll probably head back down towards 15. Hopefully, by the time NVIDIA is reporting at the end of the month, I think they report February 28th. Hopefully, the market turns back around and then they have another blowout quarter and we can kick things off into March and April on a high note. Rather than where we are right now, it just seems like everything's being judged so tough right now. But I don't mind it right now because it looks like we're getting back to investors worried about valuation, and I think that could be a good thing. And I think maybe that, amongst other things, that was the reason why AMD, after beating on their earnings, their valuation was a little high. Their 4P is actually higher than Nvidia's right now, and they are not anywhere near putting up the numbers that Nvidia is doing. So it's good to see that we are focusing on valuation again, and just everything isn't just running crazy anymore. So you have to be that more decisive about picking stocks. Um, but that's fine because we know how to do the research. We know how to get behind the best names in the market, and we just have to be patient. We can't just expect to invest during that earnings period and everything's going to take off after around that period and we can capitalize off of that. Now, some things had great earnings and great guidance and they took off. A lot of those memory stocks are doing very well. So we just have to be very selective. But back to the tech tumble, VIX surged to 20. The VIX, if you're not familiar with the VIX is, think of the VIX as like an inverse relationship to the market. When the market is up, the VIX is down. And typically when the VIX is going lower, then the market is going up. So it's a good, if you like to follow S&P 500 and the NASDAQ, look at the VIX as well. You want to be mindful of that and see, kind of get tells you the direction how the market is headed or has been past couple days. So you just get an idea. I look at the VIX essentially every single day, and you can see when we look at the market on Yahoo Finance app and just look how the some of the stocks that we follow perform today. You'll see I have the VIX in there, and I look at it every single day. The rotation shifted towards, quote, old economy value stocks, pushing the Dow to an intraday record before it eventually pulled back. All right, number 2, Palantir. They had a, quote, drop the mic quarter. Palantir was a lone bright spot in tech, surging plus 12% following a blowout earnings report. CEO Alex Karp announced 70% revenue growth. That's awesome, driven by a massive acceleration in US commercial AI adoption. We're going to hold off on AMD because we have a little bit more research here in just a second. So skipping to four, the Warsh rebound. So after the quote great metal flush, gold and silver last Friday, gold and silver resumed their ascent today. Markets are now viewing the Warsh Fed nomination as a quote hawkish dove mix, tightening the balance sheet but potentially cutting rates to support productivity. We talked about it. I didn't really think this had to do, the volatility had to do a whole lot with Warsh because yes, he is deemed hawkish, but I would say since Trump has been on Powell's ass so much, I just can't believe he would pick somebody who he believed would not lower the interest rate. So that was just kind of like didn't really make a whole lot of sense to me, and that was the reason why the market was falling. There's a mix of other things. Definitely check out the other videos. Let's see my take on why the market is so volatile and what's going on. But we'll see. Powell has a few more months to go before this new guy gets in, and I keep hearing it. It's every time you have a new man in charge or woman in charge with the Fed. There's something, either the market or something always tests them when they first get in. So we'll see. But we have to be patient. And then last, PayPal bloodbath. Shares of PayPal plummeted down 20%, wow, after missing Q4 estimates and issuing weak 2026 guidance. A sudden CEO change to Enrique Lores, formerly of HP, added to investor uncertainty. All right, before we go to the charts and dive a little bit further what we wanted to discuss, and I have a video, or it's not a video, I'm sorry. I have a chart that I wanted to show you what I'm watching S&P 500. I want to get down to AMD. So I just asked Google Gemini, and guys, if you use Google Gemini or ChatGPT, just know some of these things hallucinate. I'm getting pretty frustrated with Gemini because I have a kind of like a trading assistant that I built with Gemini, and it's not giving me real time data. And even if I'm not even looking for like something within a minute of real time data. In the closing bell, I wanted to do a little bit of research in my companies, and I ran my indicators, and the numbers just came back completely off. I don't know if I'm asking it to do too much, so I might have to play around with it or just have to be patient. Sometimes it works and sometimes it doesn't. But it's good to know you have to have some idea of what you're researching or some understanding of what you're researching. You just can't trust this stuff blindly. But moving on to AMD, they reported Q4 2025 earnings after the bell. While top and bottom line numbers were a beat, the stock is facing a sell off reaction as the market digests the fine print regarding its 2026 outlook. So revenue was 10.27 billion versus 9.64 expected, which is a 34% increase year over year. That's good. We like that. Adjusted EPS, earnings per share, $1.53 versus $1.32 expected. Good. Check mark. Data center revenue, 5.4 billion was a record high, up 39% year over year. Excellent. We like to see that. Q1 2026 guidance, 9.8 billion midpoint. And it says, while this is higher than analyst estimates of 9.38 billion, it represents an 8% sequential decline from Q4. That right there can be the first spot we're noticing. That's the reason why shares fell off today, even though they had a beat on the top and the bottom line. All right, let's see what Lisa Su had to say on the earnings call. Just be mindful. Sometimes you get the numbers and it's a beat in the top and the bottom, and maybe even guidance is even raised. Not like this case, but it's very important to see what the CEO and the rest of management is saying during the earnings call as well. Don't just take the information, the snapshot information, and go with that. Dive into it. If you don't like listening to the earnings call, real time. There's transcripts as well. For me, I feel like that I comprehend it a little bit more when it gets broken down and I can read it like this, opposed to listening to them talk. And it's obviously it's a little bit easier for me to take notes like this as well. So, what does CEO Lisa Su had to say? Oh, and be mindful, she is going to be on CNBC. I think the name of the show is Squawk Box right before the opening bell. So if you want to hear from Lisa Sue a little bit more, she'll probably be talking to Kramer, and maybe she'll be able to paint a better story to give a little bit more investor confidence in the quarter ahead and the year ahead. And also, before we get into this, don't get so stuck in between what's happening quarter to quarter. Um, we want to be long-term investors. Now, some folks like to day trade and get in and out. Me personally, I'm a long-term investor more than I am a short-term trader. I'm just not very successful at short-term trading. Maybe I'll get there one day. Sometimes I like to pair because I like leap options. And when my setup aligns. Sometimes I will do like a leap, like 6 months plus. I like to do it a year plus because you can save on taxes. And then if you really like the momentum, you can do something a little bit more short term, maybe a month or 2 months or 3 months out rather than having those leaps. So I like to play it like that. So if you like that strategy, I do have a Patreon community. It is a free version of it where I relay a lot of information, post these videos, and then a little bit more deep dive in some of the specific companies that I invest in that Patreon. I would love for you guys to join. There is a link in this description. You can join for free. And then there's a paid version as well. If you would like to see my trades real time, you can jump in and join the paid version. I'll show you how to break down, use Gemini, build you an agent to really just make things a little bit more simpler for you. It's worked well for me. I wasn't someone who watched the charts at much at all previously, but this year I really wanted to learn it. Now I'm not someone who's going to be able to point out candle patterns and things of that nature. That's not really what I want to learn, especially for my options trading. I want to really just pick up momentum, and it's really helping me identify momentum and like really great spots to buy and ride that momentum. So if you're interested in that, definitely join the Patreon. But please join the free Patreon and subscribe to this channel if you like the information, and like and share. All right. So what did Lisa Sue have to say about AMD? She remained extremely bullish during the call, emphasizing that AMD is no longer just a quote PC chip company, but a premier AI powerhouse. Okay. So the AI supercycle. So Sue stated that 2025 was a quote defining year and that AMD is entering a quote multi-year demand supercycle for high performance and AI computing. Data center growth. She confirmed that AMD sees a clear path of greater than 60% annual growth in data center segment in 2026, driven by the M1 350 and upcoming M1 or MI 450 Helios ramps. And I believe those are just the chips. Inventory in China. She addressed the MI 308 GPU sales to China, noting that while they cleared some inventory reserves this quarter, and it says in quotes 360 million, the situation remains quote dynamic due to U.S. export restrictions and market share. Sue highlighted that EPYC server CPUs now account for more than half of their server revenue, with record share gains against Intel. So, why are the shares lower? Now, this is where we get to, all right, this is why it's down 8%. We understand, even though we're just looking at the numbers and those are good and the beat in the bottom, top and bottom line, this could be the reasons why it's dropped 8%. So, number one, broken linearity. Investors suspected the AI story to move in a straight line upward. The 8% sequential drop in Q1 guidance from 10.27 billion to 9.8 billion spooked those who expected Nvidia style quarter over quarter growth without seasonal dips. So we just kind of got ahead of ourselves. Like I mentioned, the forward PE was, I want to say, like 34 times or so, whereas Nvidia's right now is probably around 25 times. So it has a higher valuation than Nvidia, but it doesn't have numbers, margins close to Nvidia's. And so that's why we're seeing this sell off. Okay. Margin hump. Q4 gross margins of 57% were artificially boosted by a one time 360 million inventory reserve release. Stripping that out, clean margins were closer to 55%, which is where they guided for Q1. So this is still far behind NVIDIA's approximately 70% margins. So again, it's comparing it to NVIDIA, and if NVIDIA's margins are 70%, but this valuation is right around 25 times, why are folks paying for AMD at over 30 times with lower margins, substantially lower margins? So that's reason for the pullback. Gaming decay. AMD warned that gaming revenue, specifically semi-custom chips for Xbox and PlayStation, will see significant double-digit decline in 2026 as the current console cycle matures. So, if you were confused by there was a beat in the top and bottom line, but we saw a sell-off in shares, this could be the reason why. But looking at the chart, it looks like that 8% drop is right around the demand zone. So this could be an area where it falls down, and then you might see investors who have more long-term mindset start to jump in and maybe push shares back up. Now, do I think that they're going to run close to their 52-week high within a month or so? Probably not, unless Nvidia has a blowout quarter and finally heads back up to $200 plus a share, and maybe it brings the entire tech sector along with it. But this is going to have to be a waiting game for AMD. We didn't really get what we wanted for this most recent quarter. Hopefully, Q1 is a strong beat, and there's a surprise and guidance for the Q2 is substantial, and then that could really propel us forward to for the second half of the year. All right, so let's get to the overall market. So we'll take it to the scoreboards. The scoreboards are the indexes, the S&P 500 and the NASDAQ. Now, I'm not going to really track the Dow, but remember I just said the Dow was, I believe, up today because a lot of money went to defensive stocks in the Dow opposed to these risky investments in, like, say, your NASDAQ. All right, so the S&P 500, it was off of its lows, which was awesome, and it bounced within a range. And I'll show you here just 1 second. But it did close down a little less than 1%, closed at 6,917. Now, I did want to show you this chart. I took a picture of this kind of midday. So we did hit that low. I think it was like 684 today, and it bounced off of that 684. I try to make it a little bit smaller so you guys can kind of see this. So you can see right here. This is right up top here is where you have, at one point it was the high for the SPY, and it hits that supply zone and it starts to sell off. You see it sells off here and it gets to a zone where it looks like it's the next demand zone, and shares are pushed back up higher. So we've seen this happen multiple times. Hit supply zones, drop down to a couple comfortable floor, and then kind of consolidates for a second and then takes shares higher again. We see it happen again, a little bit higher, probably the most recent 52-week high right up here. drops down to that same equivalent range that it did previously, and then shares move back higher. And then where we are right now, hit shares move closer to that $6,000, $7,000 S&P 500, and then it sold off again as investors took profits. It fell to 684 or so today, and then it bounced off of that. So hopefully we do get that bounce back to the all-time highs. We do have Google reporting. We have Amazon reporting this week. Uber is reporting tomorrow morning. So hopefully we have a couple and NVIDIA reports at the end of the month. I think I said February 28th earlier in the video. So we do have a couple of catalysts to push shares higher. Hopefully, cross our fingers, and we can hit S&P 500 highs again, and hopefully get a new high on the Nasdaq. So I just wanted to show you that. Uh, we're just trading in range. Anytime we get to that 7,000 range for the S&P 500, we're going to see people take profits, push shares back down, and we'll just kind of do this yo-yo up and down, trading within the range. All right, Nasdaq got its butt kicked, but off of its lows today. Closed. It was almost down $1.50 today at the close, and it closed at 23,255. And gold rebounded today. It was up 6%. Looks like it's up in the after hours as well. I think last time I saw it was about 2% in the after hours. Just be mindful. I'm looking at the charts and my indicators. We are not in all clear bullish. Heading back higher yet. I think it needs to get around 470, 475. We clear that range and maybe we can push higher and head back to 500 again. So don't be surprised that gold maybe consolidates a little bit and trades within a range until we can get past that 475 or so. But it looks like people are running back to a safe haven play, which is gold, and they're selling those high flyers and those tech stocks. Um, as far as companies to highlight, Meta today, shares were down 2%. NVIDIA off of its low today, with shares closed just lower than 3% today. We talked about AMZ or AMD, not AMC. Amazon, I was looking at, closed down just under 2% today. Their earnings, like I said, is coming up in 2 days. Robinhood or Uber, sorry, I had Robinhood on the mind as well. Shares are a little lower than 4% today, off of its lows today as well, and just kind of coincides with the S&P 500, right? A lot of these charts look very familiar to the S&P 500. We sold off, sold off, sold off until we got to a level where people said, "All right, now it's time to buy the S&P 500 again," and they rode shares back higher, and a lot of these companies bounced off of their lows. One company I've been talking about and made a video recently was Take Two Interactive. I said the sell off recently might be a buying opportunity. They had a nice quarter, and I didn't get a chance to dive into this earnings report. It's not really a company that is all that exciting right now. We just know that Grand Theft Auto is supposed to release in November of this year, and their NBA 2K has been doing good for them. Their mobile games are doing pretty successful as well, and their old Grand Theft Auto is still generating revenue for them as well. So it was actually a buying opportunity with Google Genie, Project Genie AI, whatever they call it. That information came out and it pushed a lot of these gaming stocks lower. Maybe Robinhood might have rebounded today off of the Take Two Interactive's news, and maybe even Unity as well today in the after hours. But it was good to see that Take Two Interactive bounced, and it was definitely looking like it was a buying opportunity if you were able to scoop up those shares. So congratulations if you guys did get shares at a discount past couple days. Um, I've been talking about this company for the past year and a half or so. DraftKings had a new 52-week low today. To me, it's getting overdone. Uh, Kind of along the lines of Take Two Interactive. I just think a lot of information with these prediction markets. It's There's just a lot of uncertainty, and investors don't want any part of this right now. But as far as DraftKings, I'm hoping that CEO Jason Rollins, I think is his last name. Excuse me. Hopefully, he paints a bright picture for the future of DraftKings. And hopefully, we hear the same from FanDuel as well and shares rebound. I'm looking for these shares to push closer to 30 to $35 relatively soon here. If not next quarter, I think they should probably do pretty well this current quarter with the Super Bowl, depending on the outcome, obviously, and where the money is. I think all the sharp money is on the Seahawks. I like the Seahawks as well. So if the Patriots won, it's probably going to be a big win for the sports book. But for my pockets, I'm hoping the Seahawks um, get it done. But I don't know. I don't really think that these prediction markets are really all that much of a disruptor to their business. They also have their own prediction markets being launched as well. So we'll see what comes of that. I'm still a believer long term that these prediction markets are something major is going to happen. There might be a big scandal. There was recently my background is in the gaming industry, so poker industry specifically. And one of the card rooms, they're not like casinos, they're just poker card rooms in Texas. Kalshi has partnered with them, and they're going to start doing like bets or predictions for some of they have poker games that are live streamed with a delay. Well, if you know anything about poker, poker is full of a lot of shady folks, a lot of cheating, a lot of scandals within the community. And I just think that it's just a ticking time bomb. Something's going to happen. Someone's going to try to make a buck on the side. Just Google cheating scandals in poker. You'll get a whole list of them, especially on some of these um, live stream poker games. There's just the way the game of poker. There's too much gray area. There's just it's just a lot of shadiness. The people that are involved in poker, there's a lot of shady characters. And so I think this is just an accident waiting to happen. If it's going on these collegiate sports and if it's going on to these major leagues like MLB and NBA, we haven't heard any really major scandals out of NFL or football. But if they're happening in these leagues, I guarantee there's going to happen, something's going to happen in poker, and we'll see what happens to these Kelshis and these poly markets that are allowing poker bets, I guess, in the future, poker predictions to be a part of their business. I also believe these prediction markets are going to push some of these states to legalize um, sports books, such as DraftKings and FanDuel's and all the other popular sports books that you guys like to bet at home in the comfort of your home because they want that tax revenue. A lot right now, Kalshi and Polymarket are able to operate in their state, and and the states are not collecting any tax revenue. So it's either going to be the states are going to start cracking down as far as lawsuits and things of that nature. You've already seen it. I think the state of Massachusetts, don't quote me on that, has basically barred Kalshi from operating in their state and their jurisdiction. And you're either going to see that or you're just going to see some of these states that vote yes and implement legalize um, mobile gambling in their state so they can collect some of that tax revenue. We would love to see Texas and California come on board. That would be huge for DraftKings and FanDuel and all the other online sports books. Last thing I wanted to share, I don't have anything to look at, but Bitcoin is on the decline as well. Last time I looked at it was 78,000 or below 78,000. And right now it is trading around 76, 77,000. Um, the master investor Ian himself. I watched Market Mondays yesterday. He's saying Bitcoin might fall to around 65,000. So he's saying it has a little bit more to fall. Um, I wouldn't put it past it. I wouldn't put it past it. So we'll see what's to come. But now's the time not to be emotional. Now's the time to just sit back, be patient, and invest in the best companies in the world, and let the management teams work their magic and operate efficiently and make money for us. All right, that's it. This is a late episode. I know it's a long episode, but I appreciate you guys. I'll see you in the next one.